We've got the FOMC minutes on deck, and joining us now is Kitco's Global Trading Director, Peter Hug, to tell us how he sees gold set up this Wednesday. Peter, thanks so much for being with us.
Nice being here, Daniela.
So let's start by talking about the price action in gold we are seeing so far this week. Are you optimistic about gold ahead of the FOMC minutes here?
I am. I'm actually very surprised and happy with the consolidation levels that we're seeing now. Every time gold tries to break down under 1110, there seems to be buying interest. So I'm constructive gold at these levels.
Well, I guess the question, Peter, is with all that's going on now in China and Europe, do you expect the Fed to make a move in September?
No, I don't. I mean, again, I've been in the camp that I think the Fed doesn't move, may not move until 2016. I think they may bring into some of their language some of the issues with the equity market. China hadn't happened yet prior to these meetings, so I'm not sure that will be in the language. But I do think the Fed is cognizant of what's happening not only in China, but some of the issues in Europe, some of the issues in Brazil. Brazil, it looks like it's going to implode. And the U.S. equity markets have been under severe pressure. And in that scenario, the Fed raising in September, to me, again, I don't think it's on the table.
Well, let me ask you, Peter, regardless of their decision, has an interest rate hike already been priced into gold?
Yeah, I believe it has. And, I'm sort of begging Yellen to raise the rate in September and get it out of the way. She's got herself in a corner. And, have her move the 0.25% and get it out of the way and get the markets back on track. She politically or from a perspective of getting herself trapped needs to raise the rates just to save face. I think from an economics perspective, I think raising rates now would hurt the market. But from the perspective of gold, as I said probably a couple of months ago, the day the Fed raises rates is the day I'm going to be aggressively buying gold.
Yes, I remember you saying that. Let's get some ranges from you now, Peter. Turning to silver, what levels are you eyeing?
Silver, I mean, I was a little concerned about silver's ratio to gold the other day. It got above 73. It was in the 72.5 range. I thought silver was a bit pricey relative to gold. I was looking for the ratio to get back to the 74, 75 level. It's trading at 75 now. So at this level, I'm comfortable silver. But silver and some of the PGMs and obviously the base metals such as copper are experiencing selling not only from the perspective of general macro market terms, but the deflationary scenario that's developing in China is taking that demand off the table, and it is affecting the industrial metals more negatively than gold, which is finding some safe haven bid here. So silver is still tentatively a bit of a risk here, but at a 75-to-1 ratio, if my perception that gold will hold these levels, I think silver's a good buy at the 1480 level.
All right, Peter, finally, just to recap and to wrap, we're at mid-August here. How do you see gold the rest of the month?
I mean, everything being normal, no surprise from the minutes, which I don't expect. I think we're going to have a very tight range, maybe $20 range on gold. I suspect the 1100, 1120-ish range probably will hold through another week. As we get into the last week of August, there might be some more volatility, but I think people are tired. They want to try to take some holidays. The market's extremely thin. Assuming no surprises in the market and China doesn't doesn't surprise again with another devaluation, everything being equal, I think the metals remain in a tight range through the rest of August.
Great thoughts from you, Peter. Thanks so much for joining us.
Nice to be here.
And thanks for watching the special gold report ahead of the FOMC. See you tomorrow.